Be Wealthy and Smart, episode 986.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, I'm going to give you my 2022 forecast, and this is going to cover stocks, real estate, and cryptos, and the bond market, and everything that I can think of that will be impacted financially. This is something that I put together and do my best to research and create a cohesive picture of where we're going in 2022. Already, of course, the markets have started out so volatile, and many people are feeling very scared right now. And if you're feeling scared, I totally understand. Nobody likes volatility. But you have to remember, we had such a phenomenal year last year, and the stock market is so far ahead of where it is traditionally in terms of its compounding rate that we had to have some kind of a pullback. When people get too confident that the market is going to continue and the money is easy to make, then the market has to pull back and teach us a lesson and get that fear back in the market, because bull markets always climb a wall of worry. So you have to feel scared for the market to go up. If you're overconfident and don't worry at all, well, usually the market's going to go the other way. And that's why I think we have a good chance of having both of those things happen this year. What I mean by that is already we're starting out with the volatility to the downside, which I think is going to change actually today, and the market will turn around and start heading back up. In the second and third quarter of this year, the market has the potential to go crazy on the upside and really have a strong bubble-like activity, but then get tempered and sell off a little bit more in the fourth quarter as those gains get ahead of themselves and as people get overconfident again and feeling like the money's too easy to be made and that it's going to go on forever. That's when we're going to have the pullback in the fourth quarter. So that's generally my big picture forecast for what I see, where the stock market is likely to have crypto-like volatility, both on the upside and on the downside. And we've already started to see some of that downside crypto-like volatility. And what I mean by crypto-like volatility is the crypto market tends to swing a lot more than the stock market. It swings on the upside and it swings on the downside. So it's not unusual to get a 30% swing in the crypto market, while that is a lot more unusual in the stock market. But the crypto market also has the potential to go up dramatically and have rises of hundreds or thousands of percent even in 1 year. Now, I'm not saying the stock market's going to do that. I don't think that it will. The stock market is much more tempered on the upside and the downside, but what I mean is we will see dramatic volatility this year in a way that is more something we would see in the crypto market. That's what I mean by that. But generally, I'm very bullish on stocks for this year. Again, starting off with volatility on the downside, I think we'll pick up, and especially in the second and third quarter, we'll see dramatic upside potential in the stock market with a tapering off in the fourth quarter and people locking in their gains and the market coming back to reality. I think there will be continued strength in technology, and what's going to cause the market to take off in the second quarter is like a relief rally that probably could be good news around CV, that maybe the worst is behind us, and we may see things like restaurants and hotels, airlines and cruises really start to take off again because people have pent-up demand and they're anxious to get out and socialize and travel, be in group activities again, be in parties and around people. And I think that will also lead to a baby boom. So that's where I think the stock market upside potential is really going to come from, is some good news that maybe the worst is behind us. When looking at the real estate market, high-end homes and luxury real estate look to be really in a booming trend and will continue. Second homes are going to be very much in demand still, especially on coastal properties and acreage, and those areas where taxes seem to be lower. I recommend that if you are looking at property, that you consider locking in a low interest rate loan at these very attractive low interest rates, because we will get a couple of hikes this year and interest rates will go up a couple of times. I don't agree that we'll see 4 hikes. I think a couple and we're done. But this is still a great time to refinance your mortgage, lock in these low rates, take advantage of these, because we may not see these rates again for many years. Also, real estate last year rose 13.9% in November from a year ago. And some of that is because of so much money having been created. We have 40% of all the money in existence was created in the last 2 years. And they're chasing goods that are already in short supply, which includes real estate, but also supply chains. And interest rates can't be raised too much or they risk popping the bond bubble, which is massive with all of that debt out there. And it would also dramatically increase the deficit, which is already made up of about 75% interest. So by raising interest rates, all they're doing is compounding the debt that already exists at the government level. Now, I do have some special concerns this year. Cyber attacks are definitely a big concern, and we've seen those happening in limited areas, but it could happen on a bigger case basis. I also am very concerned about the hedge funds that are short stocks in massive amounts. In February, there's going to be a new SEC rule coming into existence that the shorts are going to have to reduce their positions or have their positions sold out, which could lead to unlimited losses for those hedge funds, causing stress on brokerages that loan them money and also the banks behind them, and ultimately the Fed, who is the buyer of last resort. So what happens when hedge funds sell stock short is they're borrowing shares, selling them in the market, trying to push the price down and buy at a lower price to close the trade. If the trade goes against them and the stock goes higher, then their losses are unlimited as the stock can move up and up and up to infinity. So hedge funds have massive short positions right now, which are really not widely reported accurately. And this is going to cause dramatic stress in the financial system. Again, shorts can lead to unlimited losses, which could bankrupt our banking system. So this is a risk that is out there that we have to be aware of. But I think our banking system is due for an overhaul anyway, and we're going to see regulations come in, especially for cryptocurrencies, in regards to stablecoins. I think a law will pass so that the Fed cannot issue currency directly to citizens, which would give them a CCP Chinese-like control over the people. You see, in China, the CCP can control what people do with their money because they're issuing the currency in the digital wallet. That means they can monitor where everybody spends their money, and if they don't like how they're spending their money, well, they can literally cut them off. That's not what we want to have happen here, and a law has been proposed, and I believe will pass, that will not allow the Federal Reserve to do that in the United States. There will be no issuing of currency directly by the Fed to citizens or wallets by the Fed to citizens, which would give them the ability to monitor and control us like the CCP. We're not going to have that here. Instead, we're going to see legislation for decentralized stablecoins and wallets. But central bank digital currencies will be allowed to exist. They just aren't going to be able to control the citizens. We're going to have decentralized control of our cryptocurrency. And I think XRP globally will be used as that cross-border payment coin and will allow anything to transfer from one kind of value to another kind of value as the token in between those two types of value that are trading for each other. For example, if you want to trade one foreign currency for another, you can go into XRP to trade into the other. If you want to trade from a foreign currency into a tokenized form of real estate, you'll be able to use XRP for that. If you want to go from a stock into a bond, you'll be able to use XRP for that, or for trading from one stock into another. I think this is in our future. I don't know if that all happens this year, but I think that's the path that we're going down. And that, again, is a decentralized situation that leaves the people in control, and not Ripple, who does not control XRP. It is a decentralized, non-controlled cryptocurrency. And to change that would require a vote of the XRP holders to vote for that. Globally, I think we're in a situation of de-globalization and moving away from having China supply so much of our semiconductors and manufacturing and medicines. I think we may turn to India as a substitute for China, and that's China's loss. But the supply chains are still unwinding, and the U.S. is going to also pick up slack here and manufacture here what we used to ship off to China, because we're going to realize that we can't afford to have some of these gaps in our supply chain and delegate them to a foreign country. With some of the loss of confidence financially and in government, I think precious metals are poised to soar. And also because the shorts have really kept the price of silver and gold down over the years, particularly silver, I think they're going to start to loosen their hold, so silver can start to find its true market value, particularly in the second quarter of this year. And because cryptocurrency is gaining more legitimacy and popularity, just last year, the NFT or non-fungible token market for unique works and unique contracts grew to $7 billion. And the metaverse also started to really pick up steam and is tiny right now, but is going to be massive in the future. So we have, of course, new technologies that are going to be creating massive wealth, just like I wrote about in my book. I think Bitcoin will lose more dominance, and the altcoins will pick up and do better and create more market share. We have the potential to have a new financial system come into being in 2022, as we have the ISO 20022 cryptocurrencies come into more use and utility, particularly by the end of the year in November. But earlier in the year, I think we could see the trend start to move that way as XRP gets good news on the lawsuit and that gets resolved. So what are some practical things you can do for 2022? Well, you can refinance your mortgage and lock in low interest rates. You want to buy physical silver and hold it in your own possession. If you plan to travel, you want to book your vacations early, particularly in the spring. You want to own the ISO 20022 cryptocurrencies. Those are the cryptocurrencies that are in the new banking system, and the ISO 20022 is the messaging system that talks to each other in a standardized format. So those cryptocurrencies are the ones that are going to be used in the new banking system. And if you're not familiar with that, check out my book, 3 Steps to Quantum Wealth, where I go into a lot of detail about what that is, why that is, how that works, which cryptocurrencies will benefit, etc. I think technology, luxury real estate, electric vehicles, and precious metals have the most potential this year. And you want to be sure that you're stocked well in the cupboards with food and with cash in case of any cyber disruptions. It's always wise to take a long-term perspective, even through this volatility, and hold through it. And if you have the opportunity to buy during some of these pullbacks, well, of course, the first quarter and the fourth quarter are going to provide you opportunity for that. But otherwise, you want to stay invested for the long term if you do have long-term goals for growth of your money. I still see cryptocurrency as vastly outperforming stocks, even though stocks will have a strong time during this year, particularly in the second and third quarter. But I do see the most undervalued cryptocurrency out there is still XRP. So don't take anything I've said as investment advice. Please do your own research. Use this as a starting point to talk with your financial advisor or determine how you're going to do your asset allocation and divide your money up into different asset classes that you can benefit from. If that's something you'd like help with, check out my Inner Investing Circle, the Be Wealthy and Smart VIP experience, where I give you the asset allocation model. I give you the 9 cryptocurrencies that we're invested in and the airdrops that we have coming. And I'm there with you all the time to hold your hand because you have a lifetime membership. Once you're in, there's no more payments and you have a lifetime of my expertise and my recommendations. And for the new year, I have a special coupon rate for you to save 50% by using promo code SAVE50, S-A-V-E, capital letters, 50, SAVE50. Just go to tinyurl.com/wealthyvip. That's tinyurl.com/wealthy, WEALTHY, VIP. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.